Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Ever since the news broke that collapsed FTT, the crypto market has taken a significant hit, with over 90% of assets in the top 500 asset by market cap is down for the week, driving down all 6 major sectors. Today, we're joined by Jodie Gunzberg, managing director of CoinDesk Indices, to share her perspectives on the broader crypto market impact and what essential criteria are necessary for investment success. Jodie, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
You know, we've spoken to a number of investors this week, and one thing that they have mentioned, the risks leading to FTX's downfall, was that it was centralized. Do you agree with that?
I do believe the centralization was a contributing factor here. But as I think about the risks from CeFi, from an index perspective, I think about how the assets in our DAX-defined industry move together, and with the transparent DeFi, that's the other major industry in the industry group. And in the case of FTX's drop, it took nearly all the assets in the group down, with 30 of 33 losing CeFi tokens and 27 of 29 losing transparent DeFi tokens. So together, DeFi tokens lost about 22% for the week, which was historically bad, but it still outperformed CeFi by 10%. So there were not many places to hide in the transparent industry group, whether it was CeFi or DeFi.
Right, and given the spread that you're seeing in the industries right now and the volatility in the crypto space, are there strategies that are going to work?
Yeah, there are always some investment strategies that work, but we are in an incredibly challenging environment right now, with solid negative performance across all the sectors, with a rapid rise in correlations. Although there was a big return range, about 14% between the best performing sector, that was currency, and the worst performing one, which was culture and entertainment, the sectors became very quickly and highly correlated. Just about a week ago, the sector correlations between each other were only about 0.6. Now they've spiked to over 0.9, which makes managing risk difficult. And that, together with the third largest, fastest volatility spike in history, which is now over 80%, similar to the levels we saw in July after the Fed started aggressively raising rates and there was that high inflation. I think that the risk is difficult, but many of the investors love the volatility and look at this risk as a rich trading opportunity.
Let's go back to currency for a moment. You said it was the best performing sector. How can that be if FTT is in the sector?
That is an excellent question. There are minimum eligibility criteria for digital assets to be included in the CoinDesk Market Index benchmark. That benchmark is meant to be as inclusive as possible. It basically just requires a minimum of 30 days of price history on 2 eligible exchanges. Interestingly, although FTT, the FTX token, was ranked 23rd biggest by market cap, it never met the pricing and exchange requirements for the index inclusion. So we spend so much time looking at what's inside of the indices, but perhaps we may have found a clue if we had looked more closely at the assets that didn't make the cut.
Interesting. Anything else that our viewers should know from this week?
I'd just like to reiterate the power of this FTX event. It's driving the entire asset class down together, and may even have some spillover effects into the traditional finance landscape. FTX dominated moves last week despite a slide in the US dollar, lower than expected inflation, the midterm elections, which are normally really significant events. Now I'm watching for more of the fallout from all the companies impacted by FTX, which may bring higher spreads, more volatility, and it might create some opportunity in this crypto bloodbath.
Yeah, well, I mean, Jodie, nobody was expecting this, right? I mean, you know, FTX was one of the more respected names in the industry, wanting to work with regulators, named plastered all over in marketing. Nobody was expecting a black swan event, even just, you know, 3-4 weeks ago. So I think disappointment certainly lends there, but it's also the systemic nature of it. Some of the smartest people in the room, if you will, were invested with FTX.
Yeah, that's right. I feel like often we're looking for good-natured people. Our inclination is to trust. And even as analysts, as we dig in, when fraud is happening, the perpetrators of it are often very intelligent and working to hide it as well as possible. So of course there were red flags. Again, from an index perspective, looking back, it's like, how could the 23rd biggest token not even make it through this extremely minimal eligibility criteria of pricing just to get into the index?
Yeah. All right. Well, certainly lessons to be learned for the industry as it continues to mature. Appreciate the insight as always, Jodie. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.